This is Kai Sato. We're talking to leading Microcap board members. Today, we have the fortune to talk to Charlie Frischer. How are you, Charlie?
I'm doing great.
Charlie, if you wouldn't mind, before we dive into some other things related to Microcap, give us a little bit on your background and where you were educated and some of your work history.
Yeah, I worked in commercial real estate for about 20 years. Did real estate brokerage. I worked for the Resolution Trust Corporation in the late 80s, early 90s. Did commercial mortgage lending for about 10 years, mostly multifamily, but some commercial as well. And then worked for a private equity firm in Manhattan, Zephyr Management, for 4 years. And we owned about 5,000 apartment units that we owned and we managed. In 2008, I went out on my own, and I've been out kind of on my own, managing just our family investments since then. And I went to high school in Queens and went to Cornell, got a bachelor degree there. So that's kind of the extent of my educational experience.
And you're currently a director of Kingsway Financial Services. How did you wind up on that board? What drew you to the opportunity?
That's a good question. The largest shareholder, Joe Stillwell, kind of reached out to me. I would talk to him occasionally as I was building my position, and we would just be kind of social and talk and ask some questions. Nothing major. And then one day he came out to Seattle during COVID. We went for a couple-hour walk. He told me he might be interested in talking to me about a position at Kingsway. And next thing you know, we talked for about a year or so. And then the timing was right. Last May, I went down to a board meeting as an observer. They liked me and I liked them. So they decided to extend an offer to me, and I accepted last May.
And obviously, you've done a lot of different things, but have been involved with some other public companies. Are there any unique skills or experiences that you think you bring to the Microcap boardroom in particular?
Where I'm going now is I want to be involved with a company that wants me and that I can help. I don't want to fight and try to get into a boardroom where they don't want me. They're not going to let me in. I've got to fight. It's really hard to fight and win these things. It's emotionally draining. It's exhausting. If you don't get a full control of the board, if you get one or two board members, you're kind of in no man's land. So my new thing is if somebody wants me, I'm willing to join. But if you don't want me, I'm going to look elsewhere because life's too short. I'm getting older. I'm 56. I don't want to be banging my head trying to knock down, people whose incentives clearly are just different than yours. And if the incentives aren't aligned, you're dead. And that's been probably on the ones that haven't worked for me, and there's plenty of that haven't worked. It's always the incentives that are different.
Can you expand on some of those instances? What are some of these common challenges that these microcap boards face?
Well, my theory is if a company is 100 million market cap and it was 100 million market cap 5 or 10 years ago, it's not going anywhere. There's a lot of things that happen in business. You get to buy things, you get to sell things, you can do transactional, you can grow. There's a lot of different things you can do. If you haven't changed your market cap in 10 years, you're not going to start changing it. And it's taken me a long time to kind of realize that. I mean, there's enough things to do. The bell rings a lot. There's opportunities. And if you're stagnant, it's because you're either comfortable, the situation's really good for you, you're the CEO, you're making a couple million a year, sell the company to make you 5 million and your stock doesn't match the million or two you're making in salary. So the incentives, it's more than incentives. The playing field is different. And so what I'm trying to figure out is I want to be where the management team and the owners are playing and try to score touchdowns in the same field, and one guy's not playing frisbee, one guy's playing golf, and we're in different worlds.
Got it. Yeah, as they say, if a microcap's a microcap for too long, something wrong, right?
100%. And if you're kind of not growing, you're dying. So or you're not shrinking, but through buying back shares or something. And most of the time, if it's really well done, it won't be a microcap forever. So what's the status? Why is it where it is? What's the transition? And of course, catalysts are, I was stupid when I was young. I thought, all things will rise to the top. Value will emerge. No problem. In the long run, it's a scale. In the short run, it's a voting machine. And, Graham was right about all these things. And I thought they didn't matter. Of course they matter. And unless you want to be in these value traps, these crappy investments. So seeing something changing is really important.
Sure. And a lot of it comes down to the Buffettism of working with somebody that you like, trust, and admire.
Yeah, there's not that much of that in the microcap space.
Well, without digging up too many wounds, but can you talk about some of the past boards, things you learned, some of the mistakes?
My first 13D was a company called New England Realty. New England Realty owns, maybe now they own 5,000 apartment units in Boston. I learned about it in the late 90s. I filed a joint 13D with a couple friends of mine who were in the apartment business. I knew the assets as well as anybody in America. I'd visited them multiple times. I was doing multifamily lending. I knew the cap rates within a quarter point. The stock was 40. The the assets were worth 180. Had a small dividend. There was an old guy who ran it who was very, very tough, very smart, but he wasn't interested in selling the company. He wanted to keep running it. He enjoyed going to work every day. It was at that time Harold Brown was, I don't know, maybe he's passed, but he was probably 85 or 90 then, 83, 85, and he liked going to work every day. And so here I show up and say, "Oh, I'm here, oh, buy some shares back or sell the company or put it up for sale or do," and he's like, "We're not doing that." So we messed around a little bit. We filed a couple of amendments to the 13D, and ultimately he ended up buying our shares out. And at the end, I was haggling with him over the last 50-cent dividend was how we ended. And then so after I begged him to give me the last 50-cent dividend, we settled and made some money on that. But and the company still exists. I'm a very small shareholder now. 20 years later, the assets are probably worth 50 or 100% more than the stock price. They're never going to sell. It's literally 23 years later. It's the market cap's about 200 or 300. Maybe it was. I'll make up the math. There were 3 million shares. Maybe at the time I got to get my math. I didn't know. I think I'd be talking about this. Maybe it was a 60 million market cap. Now it's 150, 200. The assets are probably worth 500 or 400. You're never going to crack that egg. If you own it, you just got to know you might make 10 or 12% a year, but you're not going to have a liquidity event ever.
And you look back at your experience. Why are so many kind of high net worth family offices drawn to the microcap space? Is it because they can affect change? Is it because they're overlooked? I mean, Buffett himself started as very much an activist in the microcap space with,
Well,
with Fisher and
the typical, if I think when people look at microcaps, they screen them, and there's a bunch of them screened at 5 times or 5 times EBITDA, 5 times cash flow, 5 times earnings. And then I think they come to realize that, yeah, there's always an issue. The founder is small-minded, the board's small-minded, they have the wrong incentives, they're not interested in growing, they're interested in grifting. There's all these different things. So there's a reason these things trade at when they trade at 5 times, it's not this lovable, oh, if we were just waiting for you to call, and once you called, we would then show our goods to the world and our stock would double or triple. There's always a story. And as an investor, you've got to kind of dig in and hope like hell that they're going to do the right thing. It's not clear they are, and because they'll tell you they are, but at the end of the day, who knows what they're going to do.
Can you talk about the CEOs of microcaps in particular? You've dealt with a lot of different ones. What do the great ones possess? What skills do they need?
Well, I would say at Kingsway, JT Fitzgerald, who's the CEO, is really talented. He's a smart guy. He's the right age. He's 50-ish. He's been around, but he's not. He's in that sweet spot where he's really knowledgeable, but still has a lot of energy. We have a program and a strategy of sponsoring 30-something men and women with very high qualifications. Either they've gone to a service academy or they've gone to Harvard Business School. In many cases, they've gone to both. And we're gonna set them up. We're gonna help them find the $10 million business to run. They'll be the CEO. If the business works out well, they could make a lot of money. And JT is really good. He's disciplined. He has the same incentives we do. He wants to do the right thing. He's not a showman. He's not P.T. Barnum. He's not trying to sell everybody so that he can take some money off the table and then walk away. So, and he sees the potential that, we're at 250 million market cap. We could be a much bigger company in 5 or 10 years, and we should be. We've got a great balance sheet. We can fund the growth. So JT is really terrific, and I'm thrilled to be working with him. In other cases, the management team is wealthy already, in many cases. They don't have a lot of incentive. They belong to their favorite country clubs already. They've got a vacation house somewhere where they like to go with their friends. And they don't really need to change too much to get the lifestyle that they want to have. So in that case, where are we going to go? And they're not going to play ball in terms of trying to create some value for shareholders in many cases. So maybe people are better at picking CEOs than I am, but that's what I found a lot.
But especially in this environment, how have things changed as valuations have come down, as access to capital has become much more challenged? Have you seen things shift at all?
Well, my gut feeling is if you did an analytical review of activists, for instance, there's a lot less activism going on. It just feels like 10 or 15 years ago, there were just corporate raiders galore, and people have realized it's a really hard way to make a living. So if your plan requires you to change the board makeup of a company, good luck. I mean, there's some very smart guys and a couple women that are doing it, but the pool's getting smaller because even like with Bill Ackman, who I think is a very, very smart guy, he's not doing activism anymore. It's not worth the brain damage. It's easier to go buy $500 million worth of Starbucks stock or Chipotle stock or Hilton stock and just be a cheerleader. Make good decisions up front that are, with companies that aren't broken. Cheerlead the hell out of them. Try to have them just keep them on the true and narrow, and you probably make a lot more money, a lot easier, and you don't have the heartburn, and you don't have to go fight Carl Icahn on TV and yell and scream about your favorite short or some other activist, and go fight with Leon Cooperman about some payment processing company. It's a crazy way to try to make a living. So I think that's why there's a lot less of that going on.
Yeah, you're probably right. But I've only had a couple of conversations with you, and I seem to learn a lot in each one. What advice would you have for people who want to be on these boards? And I'm not saying I want to, but people want to serve on these microcap boards or get involved with this ecosystem. What would you share or convey to them?
Well, I think that keep in mind the if you have if you're a CPA and they want someone on the audit committee, that's the one skill that they find attractive, because it's always hard to find people to sit on an audit committee. And so that's the one skill set that is really valuable if you're like a 55-year-old retired CPA from a big firm. There's going to be a demand for you because you check a bunch of boxes. That's one thing. If you're a shareholder, many times, well, I should say sometimes they'll be attracted. Like at Kingsway, they liked me because I own 7% of the company. Most places, they're going to be repelled if you own 7%, because the last thing they want is somebody who's really motivated to try to make change, because nobody really wants change in the world. I'm working on getting on another board shortly, and I think it's going to work out well. And I don't want to mention the name, but it's a board, it's a microcap, but it's one where there's a very large shareholder who I've gotten to know. He and I get along. I think we would work. We have similar ideas about where the business should go, and I think I own 2-3% of the company. He owns a lot more, and I have some applicable experience. So that would be interesting. But I only want these things where somebody wants me. I don't know if I answered your question, Kai, but that's kind of how I see it.
No, and I think it's the inevitable progression. I mean, you very much sound like the Berkshire evolution, Charlie, of going in and the sandboard maps of the world and things like that. But the reality is, over time is our most valuable asset, and you don't want to spend time with people that you don't like or you butt heads with. And so, it seems like there's a lot of shareholder alignment. Obviously, Kingsway, it's all public. There's a significant ownership piece, not only by you but by the board and by management.
Yeah.
And so, those are the types of things. Can you please don't mention the company, but what is your process? Is it you find something you like? Is it you get to know, just like you did with Stillwell, something, and then you just start accumulating shares, and before you have to disclose, you try to make sure that it's a good marriage?
I had a company like 20 years ago, 15 years ago, Presidential Realty, and I made some phone calls to the CEO. Thought he was really nice, very likable. He said all the right stuff, and they didn't do well. And it's funny, so I hung up, and I got to know him a little bit and spent a little time with him, and he said all the right things and did all that, and it just wasn't it wasn't. I got kind of, I didn't make a good I didn't make a good judgment about that, and that was a super micro, and it really, well, these things happen. I think you have different techniques, right? Everybody has a sort of an investor network of people they talk to, of whether it's 2 people, 10 people, 20, 30 people you read about, there's all different information now out there. And you come across things that look cheap. Somebody kind of gets 20 minutes or half an hour of your time, starts spinning you the story. And next thing you know, you're looking at Qs and Ks and some proxies and some investor calls, and you start to kind of dig in. And next thing you know, you buy, if the way to avoid losing a lot of money is never buy one share. If you don't buy one share, you can never get to 1 million shares or 500,000 shares. So I should be more careful when I buy my first share, probably, because it's probably gotten me in more trouble. If you didn't buy the first one, you can't buy the last one. I know that's kind of self-explanatory, but there's a lot of truth to that. And then you just get involved, and then the story just has a way of winding through, and you end up on the island somehow. And sometimes you don't quite know how you got to the island. It's cheap, and then you get like in a downturn with maybe like in the last week or so, and something that you're paying 40 is 30. And next thing you know, you keep buying, and you wake up one day and somebody keeps selling you, and you own 4 or 5% of the company. It doesn't take that much, 1%, 2%. It's a funny thing how that happens, but it doesn't take that much to get there.
Sure. Was there anybody who taught you the ropes in this? I mean,
I wish there was.
Was it all just trial by fire, and you just had a lot of sleepless nights?
Well, I think like a lot of people, we went and we read all these Buffett letters, and Buffett. I think look, I'm a huge fan of Warren Buffett. The problem with Buffett is he makes it seem easy. You read 30 or 40 years of letters, you attend 10 or 20 annual meetings, and he spins a web, excuse the pun, that you could almost do this at home if you can control your emotions, and you stay away from, as Charlie Munger says, you stay away from booze, and you stay away from leverage, and you stay away from drugs and drinking, and you just focus. Everything will work out for you. And it turns out, I think he doesn't mean to, but I think it's highly misleading, because I think it's a lot harder than he kind of makes it seem. It's a very tricky game. The game's gotten tougher. There's a lot smarter people now than when I started 20 or 30 years ago. The number of people looking at deals, that if you find something that's cheap, there's 5 people already kind of milling about. That was not the case before. I have one investment which shall go nameless, a Canadian company, where it is remarkably cheap, and the company's done all the right things, and the NAV is 2 or 3 times more. And it's, this is something I would have had 10 of these 20 years ago, and I've got one in my portfolio that is universally cheap. I don't talk about it because it's a microcap. They're buying some shares back. I don't want any competition with the company, but in general, those are very hard to come by now. The world has gotten very efficient. Mm-hmm. It doesn't mean that there aren't inefficiencies, but fewer. Real quickly, in 1999 or 98, there was a REIT called Center Trust, and they owned shopping centers from Seattle to San Diego. And I happened to be in LA for a week on business and a couple extra days, and I went and visited all their real estate. And it was clear after like 2 or 3 days of visiting the real estate, it was spectacular, that this was like a $4 stock. It was worth $7 or $8. Nobody was doing any work on this. I made some money. I sized it okay. It wasn't perfect sizing. I should have had 30% of my portfolio, and I probably had 5 or whatever it was. I put a little book together, talked to some people about it. Nobody was interested. It ultimately did really well. They got bought out, and the company that bought them did really well. But these things were around, and you could find them. They're hard to find now. I used to do a lot of this in the real estate side. There was a company called Seisler Properties, which owned properties all over the Southeast. And my old company, when we were in multifamily lending, would give me an intern for the summer. And I took the intern and another guy I worked with, and we spent 2 weeks driving all over from Louisiana to Florida, visiting virtually every property they had. It was clear it was worth way more. These things are hard to come by now.
I know Center really well. I started at Macerich. Mace Siegel was the quintessential mentor in my life until he passed away. Yeah, I was there when our stock went from 95 to 5.
Yeah,
But
well, I
yeah,
was buying at 4.5 and 5, and
my cost basis got down to about 13, but I didn't know what I was doing. I didn't know how to size, and I didn't have much dough at the time. So
well,
just
like, so they had property like an Oceanside, and you go there, and there's a Big Five, and there's a shopping center, there's a supermarket, and some other stuff, and you realize this is valuable. And then they own the IKEA in Burbank. I mean, you just went. Whatever I saw was like, this is all. This is even before the internet and everything else. So it was maybe like I said, 25 years ago, whatever it was. But all the assets were really good. I probably saw 25% of the portfolio in those few days, and there wasn't a weak one in the bunch. So there you go.
what was one of your first or favorite microcap wins?
I owned 4% of the preferred shares of McGuire Properties in 2010. That was interesting. It had a great move. I sold. Well, I'll explain. I bought some at 3, and McGuire. What's interesting is this is like in 2010. It's all office buildings in LA, and all kind of the Beacon Hill area, and all these great buildings, but they were all fully levered up. But what happened is there were 20 buildings, and they were not corporate. There was no corporate financing. It was all individual loans on each property. So they could lose 10 of the 20, and you'd still be okay. And I remember talking to people who were incredibly smart, who knew way more about like the local LA market than me, and they would just say they're gonna go bankrupt. They're out of business. McGuire's done. He paid too much. And I said, well, how are they actually going to go bankrupt? He said, you don't understand. The leasing spreads are no good. They're going to go bankrupt. And what's interesting is nobody had looked at the real estate people, not the stock people. The real estate people just knew that the portfolio in general was over leveraged, but they hadn't done the work to say, well, 5 of these don't have that much debt. 5 of these are over levered, and to realize that there was going to be some residual value. So I started buying at 3, went to 1. Michael Ashner bought 10% of the preferred at $1. So then he wanted to buy 25%. He submitted a waiver to Nelson Rising to buy 25%. Nelson said no. Right after I saw Michael buy it, I knew Michael did really good work. So I stole his work and I started buying and owned 4%. I knew everybody was talking to me then. I kind of really got to know all the holders. So I was really kind of a little bit of a nexus of finding out all this information. The preferred, we were entitled to a board seat. And the CEO, says, "Oh, come down and meet with us." And then I went to their nominating committee. A couple of guys who I didn't like very much interviewed me and like kind of grilled me as to why I should be on their board. Meanwhile, they hadn't bought a share ever. The stock had gone from 20 to 3. I mean, it was kind of galling that the attitude. So they ended up not putting me on the board. And then the stock, I don't know, my cost basis might have been 3 or 4. It went to 12. I sold. It went to 25. Brookfield bought them. The preferred was 26, and then Brookfield kept the preferred outstanding. I think the preferred's like $3-4 again. So it made a complete utter round trip. And LA, downtown LA office building has been really tough. But when I sold at 12, I was like, boy, I felt like I was a loser for leaving a double on the table. But this happens.
Tough. Can you touch on maybe the best microcap you've ever seen? And you can dip into your portfolio if you want, but what was something, everyone loves to talk about an Amazon or Walmart early days or Netflix, but some of these that really grew up as small public companies, is there one that jumps out to you?
No, because I'm just not that good at an investor. I've never, because, well, I'll tell you why that is. So look, I've known about Costco like everybody else for 25 years. So when I lived in DC, we used to shop at the Pentagon City Costco, crazy busy, really one of their best stores in the country. This is 25 years ago. And you could see the place is great. We all love going there. We love to shop. Everybody's happy at Costco. It's a fun day for the family. And you look at the financials, and the financials are terrific, but it's 21 times earnings, or 21 or 18, not 20, 18, 19, 20. And you say, well, gosh, I can't pay 20 times. They have 850 some odd stores now. Maybe they had 100 or 200 then, maybe fewer. And you say, I can't pay 21 times earnings for a retailer. No one does that. You can go buy, mediocre retailers for 10. How could you pay 21? And so I didn't buy it. I bought like 300 shares or whatever I bought. But I could have bought that and been done, and ended up in the Hollywood Hills somewhere. And so that didn't happen. I said, well, it's too expensive. And now fast forward, earnings grow at 12, 13, 14% a year for 25 years. The stock ends up trading at 30 times earnings. So the thing is a grand slam. And there was a joke like 8 or 10 years ago. Buffett, who's been Munger, who's been on the board of Costco forever, at the annual meeting in Omaha, says, Charlie, Warren, you probably should have bought some Costco. And Warren says, Charlie, enough for the Costco. And then somebody I saw, like, that happened like 6, 7 years ago. And Buffett said, well, I'm not doing the Costco. And Costco's gone up like 2 or 3 times since then. And it's beaten almost every investment with the possible exception of Apple. I think it even beat Apple since that time. So, like, I think we all make a mistake of it's had its run. It's too big. It's not going to grow anymore. And that's a mistake we all make. To answer your question, it wasn't a microcap, but 10 years ago, a guy said, you should look at TJ Maxx. And I looked at the balance sheet. It was simply the very best financials I'd ever seen a company have. I mean, plenty of cash, crazy cash generation, wild returns on equity in the 30, 40% range, comp store sales that had done 4, 5, 6% forever. Just a wonderful business. Just, if you couldn't have written better financials if you made them up. And so, I owned it for a while, and it did okay. I don't know. I don't know. I ended up not owning it after a while. And I don't. These things sometimes, but like there are some incredibly good businesses. By the way, one small thing is that, because whether it was the industry or the business or off price or whatever it was, the CEOs of TJ Maxx and Ross and a couple of others were grossly overpaid. And they got away with it because the businesses were so damn good that these CEOs would get paid, routinely 10, 15, $20 million a year. Now, maybe they were the world's greatest CEOs, but it's hard to imagine there were 2 or 3 CEOs in the exact same industry that were all that good. If it was one CEO, it would have been okay. But with 3 or 4 of them in the same industry, all making that much, clearly they happened to be in the right industry with crazy returns on equity, with lots of stuff was coming in their pack away, and that was all happening. So they had great products, and they were in the right place at the right time. But that's probably the best balance sheet I've ever seen. Is like the 10-year, that you pull, but you go back and you look at the Ross Dress for Less balance sheet from 10, 12 years ago, you'd be shocked.
Yeah. How about some board members? You've mentioned a couple of them. Are there people who you just find to be exceptional microcap board members, and you tend to try to align with them and be involved with the same companies?
I want that. I don't have that right now. There's a couple of people who I think are good, but I'd like to have a list of 20 who I really know. I don't have that. I don't have that network. I wish I did. Who I'd say, look, this person's a winner. Wherever they go, good things happen, and I need to work on that. That's on my to-do list. That's a good question.
No, but it's all about the people, right? What I didn't know is that these are publicly traded startups, and early on, it's all about finding product market fit and then proving that you can scale it. And then once you've got a real cash cow, then it becomes a capital allocation play. And so it requires a very different skill set. But I think you mentioned JT and KFS, like it's an incredible turnaround story, or it could be, right? But it
is, and it happened long before I got there. But JT and the board have been trying to fix the balance sheet for 5 years now. It's only in the last 6 months that's come to fruition. But as Bezos says, if we have a good earnings quarter, it happened 3 years ago. It just shows up now. The other thing which is tricky about time is, if you join a board, it is not going to be in 3 months or 6 months everything changes. It's going to take you a few years. So if figure a 2-3 year process to kind of make things happen, and so people can say, oh, Billy Smith, he's a great board member. So if you're looking for that, and if the person does it once, you don't know if it was him or the other board members. So to build a track record of having 2 or 3 or 4 experiences where that person was a good board member and they went, and it's really hard, because unless that person starts when they're 35 years old and now they're 50, or if they're 50 and they're 65, they may be slowing down. So it's an interesting question, is the cycle takes a couple of few years. So how do you find that board member who is on his fifth board? I think the best you could do is maybe have one, like he's been a CEO or he's been somehow instrumental in only one or two companies. You're not going to get, maybe you know, Kai, but I don't think you have a hard time finding somebody who's been on 4 boards because there's just so much time in the world.
Yeah. Well, I think you hit the nail on the head. It has to be somebody who's, young and vivacious enough, but not too rich and lazy.
Yeah.
And I know way too many guys with their own family offices or whatever they're doing they don't want the liability of sitting on a public board, especially a smaller one. But I think what is my biggest goal in doing some of this stuff, Charlie, is we elevate by having better alignment, by also increasing the talent level. I think that's what I've kind of noticed. And I'm not a biotech guy and I don't understand things that need FDA approval, but somebody who's actually building and selling a product that just happens to be a smaller public company, I think that if you give the right people enough time, they can find it. But most of the microcaps that I've seen, I mean, they wouldn't get into Techstars where I'm a mentor. Some of these just standard accelerators because they're terribly unsophisticated and they're completely misaligned and they're effectively trying to become meme stocks. So just trying to find the ones.
And the CEO doesn't want to give up control. I'm involved in one drug company, and the CEO, if he became the chairman and brought a new CEO in, like the number 5 person from Merck, to kind of really run the place, the stock would double or triple in no time. We'd make a ton of money, and he probably will never do that. And that's really a bummer.
Yeah, sorry, go ahead.
No, it's frustrating. It's not going to happen. Through back channels, people I know in this story and other people who I'm involved with have tried as hard as they can to get him to change. The board's weak. He doesn't want the supervision, and it's really frustrating. And this is something that clearly would take off with a few changes to the board and one new CEO, and the CEO will just not do it. It's really it's a bummer.
Yeah. Well, you strike me as someone who is very comfortable with numbers and you get the financial side of it. How much do you think about culture and the people at the top and the bottom of the organization really buying into something?
Well, look, naively, I think the culture starts at the top. And the CEO and the executives have to walk the walk and talk the talk. They have to not be grossly overpaid. So, watching costs is really important in every business. And if your costs are out of control, and it starts at the top. So if the CEO is overpaid, the CFO is going to be overpaid. The whole accounting department will be overpaid. The chief technology officer is going to be overpaid. If everybody's tight, then if the CEO is going to travel in first class, everybody else is going to say, well, if he's doing it, maybe I can. If he's traveling coach, no way you're going to be traveling first class. So this stuff all kind of starts at the top. The leaders set the whole story. And if I used to go to I used to be a shareholder of Cedar Fair. They own amusement parks, and I would walk around the park a couple times with Dick Kinzel, who ended up being a little bit of a goofy guy at the end because he tried to take over the company on the cheap. He got stopped by an activist in Texas. But when you'd walk the park with him, he would pick up trash the whole time. I don't think that was an act. I think cleanliness was important. He wanted to keep the park clean, and he knew if the CEO was picking up trash along the way, there wasn't an employee in the park that could say, well, I'm not going to pick up trash. I don't have to. They see him doing it. So, it's cliche to say you lead by example, but these things do matter. And I think that's where the culture kind of starts.
Well said. Well, I've taken up plenty of your time, Charlie, but I always learn a lot when I talk to you. Is there anything else that you want to throw in here as we try to not only raise awareness for the right microcaps, but really the boards that are helping lead these companies?
Yeah, look, where I'm going is if you're somebody who it looks like can help a microcap, and you have an interaction with a CEO or another director, and you've expressed an interest in serving, and it's pretty clear to you that you can help, and they have no interest in you or they don't engage with you, they're sending you a signal. And take it at face value. Take it as if they really don't want your input. They don't want you around. They don't want you telling how to run their business. If they have discussions with you and they think about having you join because there's something that you can improve or help them with, well, then you've got something that's highly constructive. So that's where I want to go. I want to be on boards that if I show an interest to be on the company and they're reciprocating, that's a winner. I don't have to go fight them for the next 5 years if I get on the board. So that's the goal. So I guess the advice I'm trying to give to people is look for those kind of opportunities. They'll probably be far more productive and enjoyable than the battle royales that you can have with people.
Yeah. Well, to push you on that a little bit, because you mentioned, hey, if you have you're a CPA and you can help with audit, what are some of the other big things that people need, right? You're either making a product or you're selling a product. So
Yes.
what do what else do you think a lot of these microcaps are in need of, whether they can
Well,
identify?
one thing they do need is they need diversity. So if you're a person of color, you're a female, there's certain check the box things that are going to help them. And it's hard to find in many cases. There's lots of terrific candidates who are people of color, but maybe the people don't know who exactly they are and other things. So if you have a good resume and you'll be good for them and they'll be good for you, that's an area where you can use that to get on the board. That might be really helpful, and then help the company as well, not just to be on there because of your background, because you can help them. And so I think that's an area where people can really be proactive and do a lot of social good. Because I will say this: if you have one person of color or one woman on the board or other things, you do eliminate some of that. That really is that locker room chatter and that some of that kind of old school stuff that just goes away. And I think so. I think this is important that you have a diversity on the board with good people, but so that everybody's kind of acting in a rational way and they're not just a bunch of 15-year-olds. I've got a 15 and a 13-year-old, and we need less of that in boardrooms, and we need more, serious people who are not, running around being, silly.
Well said. Well said. Well, Charlie, thank you for your time and keep up the good fight out there.
My pleasure. Thanks for having me, Kai.
All right, see you.